When he came to power, Xi Jinping carried out a purge in the CCP. He then started poking China's neighbor, India. He jacked up the South China Sea dispute with Southeast Asian nations. He promoted unfazed wolf warrior diplomacy across the world and promised to take the economy to unseen highs back home. But soon, he turned it all about himself. He pushed his trillion-dollar pet project, the Belt and Road Initiative. He threw lending through the roof. Then it all backfired. The money never returned. Countries as well as local companies defaulted, and regional banks are at the verge of collapse under the debt crisis. Having ruined the lending sector and mismanaging the COVID-19 epidemic, one would have expected Jinping to mend his ways. But instead, Xi Jinping turned his evil eye onto the tech sector. He locked his target on Jack Ma, destroying the largest IPO before it could even take place, and tightening the noose on the tech sector as if it was Xi Jinping's to bully whenever he wanted. Now he's turned to the commodity market, which is ailing due to government interventions. So, what does all this tell you? You see, the Chinese economy is failing in every parameter, and Xi Jinping is cooking up the perfect storm that will hit China hard. Hi, and welcome to TFI Global, the foreign affairs and geopolitical analysis arm of the TFI Media Group. I'm your host Shubhangi, and in this video, I shall tell you about Xi Jinping serving China a lethal concoction of economic factors which will lead to a major recession. Let's begin. The Chinese economy has become a concoction of a financial system at the verge of collapse. Bad debts, unmotivating markets, sedentary forex reserves, and a government which is heavily involved in markets and businesses with the sole aim of inhibiting their growth. At the helm of this toxic economic campaign is CCP's General Secretary Xi Jinping. The Chinese economy has been surviving on the edge for quite some time now. However, its woes were exacerbated last year with COVID-19 and a global pushback against the paper dragon. China's forex reserves have been hovering around the 3.1 trillion mark, with repeated bouts of decline being witnessed. Only in April, Chinese reserves rose by 0.89%. In comparison, the reserves had shrunk in March by 1.09%. But these are all official figures, and the thing with China is that official figures are not always true. Therefore, it would be safe to assume that China's forex position is worse than what is visible to the public eye. Due to the failure of the Belt and Road Initiative and countries around the world growing skeptical of Chinese involvement, apart from lower exports, China's forex has been shrinking. This is basically Xi Jinping's debt trap diplomacy backfiring majorly. That China's forex reserves have shrunk from $4 trillion in 2014 to $3.2 trillion now is very indicative of the economic and financial security risk the country officially finds itself in. Unofficially, all hell seems to have broken loose. Apart from dwindling forex reserves, China is facing a ballooning debt crisis which is showing no signs of abatement. Companies are defaulting on massive loans, as a result of which banks and lenders are going down. Investors, meanwhile, witnessing the bad debt crisis of China, are fleeing en masse, which is also why stock markets are plummeting. According to the SCMP, China's domestic debt has ballooned and can no longer be sustainably refinanced, resulting in an alarming increase in defaults on local loans. So far this year, the rate of domestic corporate defaults is double that during the Chinese stock market crash of 2015. Chinese companies' debt servicing costs are climbing, with $2.14 trillion of bonds maturing by 2023, 60% more than the value of bonds that came due from 2018 to 2020 alone. The total government debt ratio in China is 45.6% of the GDP. While the central government's debt ratio is 20%, the local government's debt ratio is 25.6%. Investors are hardly motivated by such figures, which many believe to be a gross underestimation of China's actual financial health. Danke, which functions as a rental agent for 500,000 Chinese tenants, is reported to have run into financial problems. It is also alleged to having failed to pay their landlords across China as a rental agent. Similarly, in June last year, it was found that King Gold, China's largest privately owned gold processing and jewelry company, had passed off 83 tons of gilded copper as gold in collateral. Initial public offerings on the Chinese stock markets are slumping too. A massive downturn seems imminent since Chinese authorities are continuously poking their noses in the stock markets and tweaking regulations, even as the fragile markets trade susceptibly high. At the same time, Xi Jinping is also bullying Chinese businesses, especially tech giants, while also specifically targeting the fintech sector. Overall, the market sentiment is negative, and if the markets collapse now, a recession seems imminent. The combined market capitalization of 10 leading IT and high-tech companies, including Alibaba Group and Tencent Holdings, has plunged by over $800 billion, or almost 30% from a peak in February. Meanwhile, Australia has effectively stamped its authority in the Chinese commodity market. It has exposed China to be a heavily import-dependent country. Because China is the largest consumer of most industrial commodities such as iron ore, copper, and crude oil, authorities were on high alert when raw material prices soared earlier this month. When the prices rose, the government intervened, causing prices to plummet. However, the entire fiasco has established just how dependent China is on Australian raw material. Jinping's tariffs against countries like Australia, his onslaught on the steel sector, his personal wars with the private sector, all amid a pandemic, are proving to result in a rollercoaster ride for China's financial systems and markets that is not going to end well. Xi Jinping is brewing the perfect storm in the Chinese economy, and this can be disastrous in the coming years. Xi Jinping has taken it upon himself to bring a mountain of crisis, and the effects are now becoming more than just visible even to outsiders.